Hello everyone. Hope you all are good and I hope that you have studied second chapter from part 2 accounting for debentures thoroughly. Hope you have been watching all the video lectures for the same chapter. We have completed that chapter within 7 lectures. The lecture previous to this was the last lecture from chapter 2 accounting for debentures. Yes? And in today's lecture, we are going to start a new chapter, chapter 5, from part 2 again, which is accounting ratios and analysis. It is given on page number 210 in your textbook, part 2. Yes, the very first lecture for this chapter. So, the very first thing that we are going to discuss about this is weightage of this chapter. So the total weightage of this chapter is of 8 marks, of which there will be 2 MCQ of 1 mark each in section A, of course. Then there will be 2 VSQ, 1 mark each. VSQ is very short question in section B, again of 2 marks. And there will be 1 short question of 4 marks. Yes, you can also say there will be 2 questions in a question, each of 2 marks. Yes. Alright, so the total weightage of this chapter is of 8 marks. I'll explain about a 4 mark question, that what type of question it is going to be. Yes, let us start solving sums. Let us understand about this chapter, and then when we'll solve the sums of this chapter, you'll get to know how a 4 mark question is asked. Alright? So, total weightage is of 8 marks, 2 marks MCQ, 2 MCQ, 2 VSQ and 1 short question of 4 marks. Fine? So, starting with the definition, it says, I am Pandey, says that the relationship between 2 accounting figures expressed mathematically is known as financial ratio, accounting ratio. Yes, ratios help to summarize the large quantities of financial data and to make qualitative judgment about firm's financial performance. Now you know very well the ample of calculations are undertaken in accounting to know the financial position of the firm. Yes, to get results out of various data recorded. So similarly, whenever the relationship between 2 accounting figures, yes, when it is expressed mathematically is known as financial ratio. This can be the definition for accounting ratio, financial ratio. This can be asked as a very short question, the definition of accounting ratio. Yes. Further, the topic on page number 213 in your textbook, it says presentation of ratios. This is just an introduction, the definition and the second topic that we have taken, presentation of ratios. This is all the basic theory. This will be applied in sums and then you will understand this theory concepts properly. So in simple terms, ratios can be presented in terms of proportion, then in terms of percentage, then in terms of times. Yes? We are going to learn various formulas in this chapter ahead, and you will understand the answer to be presented in terms of proportion, percentage and in terms of times. Yes? The examples are given for all 3 concepts here that we are not going to understand for now. You just have to understand that the ratios can be presented in 3 ways. That is proportion, percentage and in terms of times. There is no other detail required here. So moving ahead, they say the next page itself, 214, in your textbook, it says classification of ratios. So classification of ratios can be done in two categories: traditional classification and functional classification. The main thing is here, profitability ratios given on page number 215. There are 4 ratios under this. See, the main objective of every business is to earn profit. The earning capacity of the company is known as profitability, obviously. So there are different ratios to measure profitability. Obviously, the main objective of every business is to earn profit. Yes? And the earning capacity of the firm is known as profitability. And to measure this profitability, there are different ratios, and which are they? Firstly, it is gross profit ratio, operating ratio, operating profit ratio, net profit ratio. So what you are going to do is that you will be writing all the points that I have explained in today's lecture from the beginning and whatever I'll explain till end. The very first thing that you will write is weightage in your fair book. Then you will write down the definition. Then you will write down presentation of ratios in terms of proportion, in terms of percentage, in terms of times. No detail is required here. Okay? Then, classification you will write down. Then the most important thing is here. You will give heading profitability ratios and you will write down the 4 names of this ratio. Gross profit ratio, operating profit ratio, net profit ratio. These ratios are calculated to measure profitability of business, of which the very first ratio we are going to understand in today's lecture, which is gross profit ratio. Yes, I repeat, you are supposed to write everything in order that is taught in today's lecture. And now onwards, you will follow the same pattern. So here we are talking about gross profit ratio, the very first ratio from profitability ratios given on page number 215. Yes? This ratio is given on page number 215. Theory you will read. Whatever is presented on your screen is also given in your textbook. We are moving towards the calculation of we are moving towards the formulas related to the calculation of gross profit ratio. Yes? So here if you will see on your screen, the formula for gross profit ratio is given. Gross profit upon total net sales into 100. This is the formula for calculating gross profit ratio. I repeat, gross profit ratio equals to gross profit upon total net sales into 100. Yes? So obviously, if in the given question you are instructed that you are supposed to find out gross profit ratio, then you should be available with the figures of gross profit, net sales, gross profit and net sales. So firstly, what is the formula for obtaining gross profit? The formula is given just before the formula of gross profit ratio. It says gross profit equals to total net sales minus cost of goods sold. Okay, so gross profit equals to total net sales minus cost of goods sold, and gross profit ratio equals to gross profit upon total net sales. Net sales equals to sales minus sales return. This you know very well. We have understood this in trading account. Alright? Now, there is another formula for calculating cost of goods sold. In short, you need three things: gross profit, sales, and cost of goods sold. So in the given formula, you can also turn it. You can also change it. If you want to obtain cost of goods sold, what will be the formula? It is net sales minus gross profit. And if you want to obtain the answer for sales, it will be gross profit plus cost of goods sold. Yes, we have just changed the formula. So you will memorize only one formula, that is gross profit equals to total net sales minus cost of goods sold. Yes, and gross profit ratio equals to gross profit upon total net sales into 100. Yeah. Now previous to this are also various notes and changes in stock, etc., etc. Yes, that we'll consider whenever required. For now, you have to give heading gross profit ratio equals to gross profit upon total net sales into 100. The formula that is given on your screen. Below that, you will write down the formula for gross profit. Gross profit equals to total net sales minus cost of goods sold. Yes. Then you have a long formula for calculating cost of goods sold on page number 215. The formula for calculating COGS, cost of goods sold. And it says opening stock of raw material, this is opening stock, simple opening stock, plus purchase expense minus closing stock. The figure obtained is cost of goods consumed plus wages plus factory expenses gives you COGS, cost of goods sold. Alright. I repeat the entire concept here. We have started with the topic of profitability ratios. Profitability ratios are calculated to measure profitability of business, of which the very first ratio is gross profit ratio. Gross profit ratio discloses the relation between gross profit and total net sales. Just the way your definition says, it presents the relation between two accounting figures. So which are the two accounting figures in gross profit? The relation between gross profit and sales. Yes? So this makes the meaning of the definition clear here. That ratios express the relationship between the accounting figures. Yes? Gross profit ratio is an income-based ratio. When gross profit is an income and its proportion to sales is determined. This ratio indicates percentage of gross profit to sales. Of course, gross profit is related with sales. Sales is what? The goods that you sell. Obviously, that is ultimately the profit that you make. Yes? Sales means revenue from operation, income from operation. Operating income means the income which is generated from the business in which company deals. Sales means net sales. Sales less sales return. You need to highlight this point. Sales means net sales, which is sales less sales return. Obviously, sales minus sales return gives you net amount of sales. Then what is total sales? Credit sales plus cash sales. You need to highlight even this point. What is gross profit? excess of sales over cost of goods sold. You will highlight this too. So what is cost of goods sold? The long formula is given here, which you will write in your fair book. You will memorize it compulsory to solve practical sums. In this chapter, the entire chapter is based on formulas. So it is compulsory that you write each and every formula at least 5 times every day. Otherwise, it will lead to a big confusion. Then the formula for gross profit, which is given after the note, the second note given here. Gross profit equals to total net sales minus cost of goods sold. See, we have understood about total net sales. It is sales minus sales return. Then we are talking about, then we have understood about COGS here. Then we are talking about gross profit, which is sales minus COGS. Finally, gross profit ratio equals to gross profit upon total net sales into 100. Objective is to measure the gross profitability trend. The increasing trend of this ratio indicates enhancement in profitability. Obviously, if gross profit ratio is higher, it indicates that the business is making more profit. Simple. So, let us move towards the practical calculation of sums. Illustration 1. Calculate gross profit ratio from the given information of Z Company Limited. There are 2 years given, 2016 and 2017. So firstly, we are calculating for 2016. Gross profit ratio equals to gross profit upon net sales into 100. What is gross profit? 1,20,000. What is net sales? 4,80,000. So simply 1,20,000 upon 4,80,000 into 100 gives you 25%. Gross profit ratio for the year 2016. Then for the year 2017, similarly 1,80,000 upon 6 lakh into 100, 30%. Simple, we have just written the formula and we have substitute the figures, respective figures, and we have obtained the answer. Just that simple. Alright. And they say question can also be asked on the basis of information of 1 year. Interpretation they have given. They say as compared to previous year, gross profit ratio is increased from 25% to 30%. Obviously, previous year, gross profit ratio was 25%. Now it is 30%. Yes? So obviously, there is growth in gross profitability. Gross profit, we have just understood the formula. Sales minus COGS. What is gross profit? 25%. Sales, 100%. COGS, 75%. Similarly, for the second year, this is just an interpretation. If you will read, you'll understand it well. Yes? So, we have a sum of similar kind in the exercise. Question 4 in exercise. Yes? Sorry, here. This is the solution for the first sum in question 4 given in exercise. As they have written in the illustration that the question can also be about 1 year. Here there are 2 years and in this question there is information only for 1 year. I am talking about exercise question 4, sum number 1 in it. It is solved and presented on your screen. You may please solve it and look into it for solving your doubts. Alright? Then, we have illustration 2. From the given information of O business entity, calculate gross profit ratio. Sales and COGS is given. You are supposed to calculate gross profit ratio. What is the formula for gross profit ratio? It is gross profit upon sales into 100. But the figures provided are sales and COGS. So the very first thing is that you should obtain the answer for gross profit. And what is the formula for gross profit? We have understood here. Here it is. Gross profit equals to sales minus COGS. And in the given sum, we are provided with sales and COGS. So firstly, we'll obtain gross profit. And then we'll obtain gross profit ratio. You can see here. Gross profit is not provided. Thus, gross profit is required to be calculated. Which is calculated with the formula sales minus COGS for 2016, 2017. 8 lakh minus 6 lakh gives 2 lakh. Then similarly for 2017. Further, there is no need of explaining. You will substitute the figures and you will obtain the answer. And you see this ratio is presented in the terms of percentage. You are writing percent after every answer that you obtain. Yes? So again, the second sum in your exercise is similar to this. In the given question, you are provided with sales and COGS. You have obtained gross profit, then gross profit ratio. Yes? So you will solve these sums on your own. You can obviously watch this video on YouTube. So when you are solving, you can pause the same and you can cross-check your answer with the answer that is presented on screen. Yes, the sums are extremely simple. So I am not going in much detail. Right? Fine then. Let us move towards illustration 3 now. Again, you are having figures for 2016 and 2017. Now what we are going to do is, we'll calculate only for 2016. I'll teach you. And you can calculate for 2017 on your own. Because it is similar. Okay, let us read the question. Information of 2 years of Q company is as follows. Calculate gross profit ratio. So what is the formula for calculating gross profit ratio? It is gross profit upon net sales into 100. Are you provided with gross profit anywhere in the question? No. Are you provided with the figure of sales? Yes, you can obtain it. Sales minus sales return. You will obtain net sales. But what about gross profit? Gross profit equals to sales minus COGS. You are not provided with COGS even. But you are provided with the content from which you can obtain COGS, and the formula for which is here. The long formula you are supposed to apply in illustration 3. Yes? See. To calculate gross profit ratio, gross profit is to be ascertained by preparing income statement. You can see here, firstly, for the year 2016. What is net sales? It is 10 lakh. 10 lakh 20,000 minus 20,000 as per the question. Then, cost of goods consumed. Opening stock plus purchase expense minus closing stock gives you 6 lakh 10,000. Sales 10 lakh. COGS 6 lakh 10,000. Sales minus COGS is what? Is gross profit. So 10 lakh minus 6 lakh 10,000 gives you 3 lakh 90,000, which is gross profit. Yes, they're presented in the table form. You can also present it without table. It's completely fine. If you will write down net sales equals to sales minus sales written, it's okay. Then you will calculate COGS separately, it's okay. But at the end, GP equals to sales minus COGS. So 10 lakh minus 6 lakh 10,000 gives you 3 lakh 90,000 rupees. Similar calculation for 2017. Yes, we have used the long formula for calculating cost of goods sold. Yes, and here the cost of goods consumed. You might be getting confused between cost of goods sold and cost of goods consumed. See, cost of goods consumed, here it is, plus wages, factory expenses. But in the given question, there are no wages and factory expenses. So cost of goods consumed itself becomes cost of goods sold. Yes, here you are provided with opening stock, purchase expenses, closing stock. With this calculation, you will obtain cost of goods consumed. Further, if you will add wages and factory expenses, you will obtain cost of goods sold. But wages and factory expenses is not provided here. So cost of goods consumed is cost of goods sold itself. Yes. So the only thing that you are supposed to keep in mind is which formula is to be applied to obtain the necessary figures. So this way, after calculating net sales and COGS, you have obtained gross profit, which is 3,90,000 for 2016 and 6,50,000 for the year 2017. Yeah. And if you will place necessary figures in the formula, illustration 3 is given on page number 217, and after that on page number 218 the calculation has been presented and the answer is obtained, the image for which is failed to be captured here. So please look into your textbook and obtain the same. Right? Fine, then illustration 4 is also same. Here also I can see that you are supposed to obtain net sales, then COGS. Yeah, it is same. Alright. Now here the new point is changes in stock. Here it is given changes in stock. Now this topic is here. See, changes in stock, point number 1 and 2 after first note. Positive difference, negative difference. In our sum, it is negative difference. It is to be deducted from cost of goods sold or added to income. The figure presented in bracket is negative difference and hence is to be deducted. See, we have deducted. If this was positive, then it is to be added. Here it is, added to cost of goods sold. Negative difference, deducted from cost of goods sold. Changes in stock. Illustration 4, changes in stock. The figure in bracket is negative difference. Negative difference is to be deducted from cost of goods sold or cost of goods consumed. Simply it is deducted here. If it is positive, it is to be added. And it is added in 2017. Just that simple. Yes? And again, if you will insert the necessary figures, you'll obtain the answer for 2016 and 2017. Yes? So, yes, of course, the practical sums have been taught in this lecture. So obviously you need to sit with your writing book, textbook, pen, pencil, Kelsey, everything. If you will watch this lecture only once, it is next to impossible for you to understand. So you'll have to watch it repeatedly on YouTube. You'll have to pause, you'll have to calculate the sum, you'll have to understand, you'll have to follow each and every instruction that is given, and only then you'll be able to solve these sums. So finally, the third sum in question 4 exercise is similar to illustration 4 and 3. No, it is similar to illustration 3, sorry, which is calculated here. And the answer is presented here. Yes, the sum is done step by step. So please, whatever sums have been done, whatever illustrations have been done in today's lecture, you will read all the questions. Then you will watch this lecture, you will pause whenever required, and then you will solve the sums. You will compare the answers of the sums of exercise that I have calculated and presented on your screen. Yes? With this, we complete the topic of gross profit ratio from this chapter. And this is your homework for today. With this, we end this lecture. We'll meet you in the second lecture from the same chapter soon. Till then, stay home, stay safe, and study well.